Good morning, students. Welcome back to this session on advanced accounting. So in the previous session, we were discussing revenue recognition as per AS9. Some part of the revenue recognition we had discussed, and today we plan to cover the remaining part. Along with this, as we discussed, we are also planning to cover AS12, which is about the government grants, and then of course amalgamation, okay, which is again an important topic. And as far as questions are concerned, so some of the detailed questions are also expected out of that. Okay, so that is going to be the agenda for today. So now continuing on the revenue recognition, we discussed about revenue recognition that for revenue to be recognized in respect of goods, there are some criterias which are required to be fulfilled, and only when those criterias are fulfilled, the revenue can be recognized. And primarily that was about the transfer of significant risk and reward in relation to those goods. And once the company gets this assurance, okay, which is about having no uncertainty as regards the collection to be received from the customer. Okay, so no uncertainty as regards the collection. Okay, so once we have these things in place, what do? We can just go ahead and recognize revenue basis that. Now, moving on to the next aspect of the revenue recognition. Now, some of the companies, along with sale of goods, may also be rendering services, or some of the companies may only be rendering services. For example, if we talk about IT companies, okay, say companies like Infosys, if we talk about companies like TCS, so they are primarily into what? They are primarily into the services. Okay, of course, along with services, some of the goods in the form of intangible assets may come along, but primarily that is services. Now, in terms of these services which are rendered by the company, what is going to be the criteria for revenue recognition? Now, as regards the services, revenue should be recognized once again on the basis of the terms and conditions between the company and the customer. Okay, company and the customer. And one prime requirement, or you can say one most important criteria which one needs to look at, will always be what? That whether the service has been rendered or not. Okay, because there is an obligation. There is an obligation on the part of the entity. What is that obligation? To render services. Okay, that is also called as obligation to perform. In case of goods, that could be about sale of goods. Okay, that could be in relation to delivery or whatever be the term that one has to look at in respect of each and every contract. In case of services, the services should have been rendered. So when the service is provided, or in some of the cases, when the service is being provided, revenue can be recognized. Okay, but as we discussed, there are two terms. Okay, when the services are fully provided, you can say, or when the services are being provided, means those are not yet fully provided, but those are in the process of getting provided. Now, on the basis of these two things, revenue can be recognized. Okay. Now, under services, we can say there are two methods. So these are the two methods which a company may adopt in relation to revenue recognition. One is called as POC method, means percentage of completion method. The other one is called as completed contract method. Okay. Now, let us first of all discuss this percentage completion method. Now, what do you mean by percentage completion method? I would say over here, we can just draw references from AS7. Okay, in relation to this, we can draw references from AS7. Now, in the previous session, we discussed AS7. Yeah. And in case of AS7, if you remember, we discussed percentage completion method. Can you just briefly tell me what was the requirement of AS7 in relation to percentage completion? Over to you. Yes, everyone. In relation to AS7, what is the requirement when we talk about percentage completion? Means, what do you mean by percentage completion method? So how do you apply that percentage completion method? Over to you. Yes, everyone. How do you apply percentage completion method? Yes, quickly, waiting for response. How do you apply percentage completion method? Great, I've started receiving your answers. Pooja is saying percentage completion needs to be worked out. Okay, there's a formula for doing that. Rashmi is saying recognize the revenue which is there till date, means till the time the project is completed. Pratima is saying total cost in terms of percentage you need to find out, and that is how you recognize the revenue. Then Ritika is saying amount of work that has been done, that much revenue would be recognized. Okay, Uni Krishnan is also, I think, talking about the same point. Actual work done divided by estimated work. And then I think this response comes from Srinivasan. He is also talking about the percentage completion. Now, as you have rightly mentioned, there is a method, there is a percentage which is required to be computed. But principally, what do you call it as? Like Ritika mentioned, amount of work which has been completed, or you can say portion of that much work which has been completed. In relation to that, revenue can be recognized. Yes or no? Yeah. So that is something we discussed in case of percentage completion method. Now the same methodology you need to follow over here as well. Same methodology. Okay. What do you mean by that methodology? That if the work is, say, for example, completed, say 70%, so you'll recognize revenue up to 70%. If the work is completed, say 35%, so the revenue will be recognized to the extent of 35%. Or when the work is getting performed, okay, so when the company is in the process of rendering services, so as and when the services are being rendered, as and when the services are being rendered, the revenue can be recognized. So let's take an example to discuss this. So now what do you mean that as and when the services are being rendered, so you can recognize revenue? So what do you mean by this? Okay, so let's take an example. Just give me a minute. Okay, so now say if we talk about AMC services, okay. So now we are looking at a situation wherein the company is providing AMC services. Okay. And in respect of AMC services, company has a contract with the customer. What is the contract? That for next 3 years. So this is year 3, this is year 2, this is year 1. Okay, so currently we are in the first year. Now company has a contract with the customer that for next 3 years, AMC support will be given. Yeah, which is about annual maintenance services. Okay. Now that is the arrangement with the customer. And in terms of revenue, the contract says that for every year, okay, or you can say for every month, revenue is fixed at rupees 50,000 per month. Okay, for a period of 3 years. So this amount is fixed for a period of 3 years, but it will be rupees 50,000 per month. Now, in this case, let's suppose we are at the end of the year, and let's suppose end of the year is what? 31st March 2024. Okay. Now, at the end of the year, at the end of first year, if you look at this arrangement, contract is not completed. Yes or no? Contract is not completed. Contract is going on. Okay, so it's an ongoing contract. Contract is not yet completed. Yeah. But for our purposes, because if you look at it from the perspective of the company, company will have to recognize or maybe close the books of accounts in relation to this particular financial year. Yes or no? Company will have to recognize revenue in relation to first year. Now, in this case, what do you think should be the amount of revenue to be recognized by the company? Or do you think, okay, so I have another option for you. Or do you think that in this case, revenue will not be recognized by the company? Why? Because the contract is not yet completed. Contract is going on. So till the time contract is not yet completed, how can the company recognize revenue? So what are your thoughts? Over to you. Okay, understood the question. So in this case, how do you think revenue should be recognized in the first year? Or do you think no revenue should be recognized in the first year? Over to you. Yes, quickly. Over to you. I think Preeti and Sangeetvani also answered the previous question. I missed out. No worries. So please go ahead. So in this question, what do you think should be the amount of revenue to be recognized, or zero, or it should be zero? Over to you. Quickly, okay, so Pooja is saying revenue should be recognized 1/3. So what do you mean by 1/3? Can you please let me know the amount? Because we have all the data available with us. Okay. Sunil is saying 15,000 will be recognized. So can you explain, Sunil, how do you compute 15,000? Okay, Sangeetvani is saying revenue will be recognized amounting to 6 lakhs. That is 50,000 into 12. Rashmi is saying it will be 2 lakh. Okay, so can you tell me how do you get 2 lakhs? So I can see mixed responses and all different responses. Quickly. Kiran is saying only this period revenue will be recorded. So what will be the amount, Kiran? Ritika is saying 50,000 is for all 3 years or 1 year. No. So if you look at this question, this is 50,000 per month. Okay, so this is 50,000 per month. Yeah. Okay, so Pooja is saying it will be 50,000 into 12. All right. What about others? Quickly, I think it's quite easy for you to answer. Everyone. Yes, tell me. Okay, so Kiran is saying the amount of revenue to be recognized will be 6 lakhs. Pratima is saying it will be 5 lakh 50,000 if these are 11 months. No, these are 12 months. So Prashant is saying it will be 6 lakhs. All right, so let's look at the solution now. See, in this case, what is the arrangement between the customer and the entity? That AMC services will be provided. Now, if you look at this maintenance support, in respect of maintenance support, as and when this time is getting passed, okay, so every day when it gets passed, in a way, entity has completed its obligation. Yes or no? So if you look at it from the perspective of the entity, Okay, so let's suppose if we look at it from the perspective of the entity, and this is the customer that we have. Now, with every passing day, with every passing month, what is the obligation of the entity? To provide maintenance support. So that's the obligation, to provide maintenance support. Now, is this obligation getting completed on a daily basis, on a regular basis, with the passage of time? The answer is yes. Can we say that as and when the services are provided in terms of maintenance support, those services are being consumed by the customer simultaneously? Those services are being consumed by the customer simultaneously? Yes. Yeah. So that is also consumed by the customer simultaneously. Yes or no? Yeah. I think I had this query from Aaron. So Aaron is asking for the page number. See, there is no page number, Aaron. Huh? So these questions you cannot find this in the study material. Yeah. So these are different questions. Okay. So you can just follow these questions over here only. Okay. So now, because the arrangement in this case is such that as and when the services are being rendered, these are being consumed by the customer. So that's why in this case, can we wait for this entire contract to be completed, say by the end of 3 years, and then recognize revenue? The answer is no. Answer is no. Okay, so that's why in this case, what do we need to do? We need to recognize revenue on a proportionate basis, or you can say on the basis of stage of completion, or you can say on time basis. Yeah, so these are all one and the same thing. And that's why in this case, what is the amount of revenue which the company will recognize in first year? So it will be 50,000 into 12. So that means 6 lakhs will be the amount of revenue to be recognized in first year. Okay. And same in second year, means again in the second year it will be 6 lakhs. Again in third year it will be 6 lakhs. I got this same response from Preeti. Yeah. It will be 6 lakhs per annum. Understood? So this is how revenue needs to be recognized in respect of services when it comes to the proportionate completion, or you can say percentage completion. Generally, in case of rendering of services, this is the methodology companies will have to follow until unless the arrangement is completely different. Until unless the arrangement says that only when the work is fully completed, yeah, so that is when the customer is obliged to make the payment. Okay, so that's why very commonly this is what you find in respect of revenue recognition. However, if let's suppose the arrangement specifies that the work will not be considered as being rendered till the time it's not fully completed, or maybe for some reason, if the company were to follow completed contract method. Okay, so in such a case, when do you recognize revenue? Only when the contract gets completed. But as I told you, in case of services, you will find that rarely. Okay. Now moving back to the presentation. Now, other than these sale of goods and rendering of services, AS9 also talks about 3 more types of income. So one is interest revenue. So it talks about how do you recognize these types of income. So these are not really the revenue in the context of a company. Yeah. Why? Because again, that will be dependent on the nature of the business company will be into. But as of now, if we understand that the company is not into financial business, or company doesn't have any business wherein this is earning the royalty primarily in terms of the ordinary course of business, okay, or the company is not into investment, okay, wherein it is primarily earning the dividends, okay. So in those cases, it's something which we'll call it as other income. Now, before I talk about it, I can see some of the queries coming in. Yeah. So any questions, any doubts, if you have, you can just please share. In the meantime, I have this query coming from Srinivasan. Srinivasan is asking, sir, why there is a separate revenue recognition standard for accounting standard and Ind AS? Okay, so again, I'll just quickly touch upon this for the purposes of your understanding. See, when it comes to Ind AS as compared to accounting standards that we have, so the norms of accounting are different, okay, under two gaps. So you can say these are two different gaps or two set of accounting standards. Now, why are these norms different? Why? Because if you look at some of the large companies, okay, for large companies, a different set of accounting norms have been considered, which are largely aligned with the global requirements. So that is what you have in case of Ind AS. But when it comes to Indian GAAP, okay, so Indian GAAP is primarily, if you currently see, is not meant for those large companies. Okay, this is primarily in respect of, you can say, small or medium sized companies, wherein considering the cost benefit analysis, okay, those significant requirements which come along with Ind AS, or you can say with global norms, those have been, sort of diluted at a certain level so that the companies can just feel comfortable. So that's why there are two sets. Okay. And any other questions, any other doubts that you have, just keep sharing. If you have any questions, any doubts, please keep sharing. Okay. So now I'll move further. Now, how do you recognize interest income? On a time proportionate basis. Means if there's a loan which has been given by a company to a third party, now on this loan, on a time basis, revenue will be recognized. On a time basis, the revenue will be recognized. Okay. Then I think Pooja has a question. I think she has a query around this question on study material. Sure. See, some of your queries which you have in relation to the questions on the study material, I would say let's park that towards the end of our session. So we'll just park some time in relation to discussion on that. Okay. But otherwise, if you have any conceptual query, any other queries that is around the things we have been discussing, you can just discuss immediately. Okay. Then I think this next question comes from Prashant. Okay, so very good question. Prashant is saying, sir, what if the revenue is not certain? Okay, so what if revenue is not certain? Now, when you say that the revenue is not certain, I understand that you are talking about certainty in terms of money to be received from the customer. Okay, because how will the revenue become certain? So there are only two ways. One is you will go and fix that amount with the customer, which will be through a contract. So it can be an agreement, contract, purchase order, or maybe any other arrangement through which two parties have agreed that amount. Okay, so that is one way it will be certain. Only and only when it will be agreed between two parties, you will move further. So that certainty will always be there to begin with. Okay. I think the other concern, which I'm sure you might have been looking at, could be in relation to the receipt. So that is what we discussed. As regards that certainty, standard doesn't say that you need to be certain. Okay. So it's the negative terminology which the standard has used. I'll just take you back to that. Okay. What do you mean by negative terminology? Standard says that there should not be any uncertainty. Okay. So it doesn't say there should be certainty. There should be no uncertainty. No significant uncertainty should be there. Yeah. So what do you mean by this? So you can say that, of course, you cannot be 100% sure as regards collection. But if you have good chances, if you believe the party will be making the payment, yeah. So in that context, we'll look at it. Yeah. But if let's suppose for some reasons you believe the money will not be received, so will you enter into that contract with the customer practically? Or do you think you will just go ahead and execute the sale of goods or maybe providing services to that customer? No, you will not do that. Okay. So generally it is understood that when the two parties have come together, so the other party or the customer will be expected to make the payment. Okay. Yeah. Preeti is asking about escalation. See, escalation, you can say, is a percentage or a proportion which is generally asked for in terms of revenue. Why? Because maybe if I am the entity, okay, and you happen to be the customer, let's suppose, maybe there's a time frame of which we agreed over which I'll be rendering services to you. Yeah. But now we have crossed that time frame. Could be for any reasons. Huh? Now the cost. So every time when I'll enter into a contract, so I'll have some cost in my mind. Okay, on that basis, I would want to recognize revenue. Yes or no? So let's suppose my expected costs or my budgeted costs have started increasing, yeah, with the passage of time. So inflation will come into picture, or maybe the way I estimated revenue may not have been so appropriate. So I may request you that if you could just consider increasing the amount of revenue by X%. So that is what you call as escalation. Okay, in the context of revenue. Then Sangeetwani is saying, sir, after recognizing then amount is not received, then what do you do? No worries. So let's suppose if you recognize revenue. So let's suppose if the entity and the customer were clear, okay, in terms of various criteria to be fulfilled, on the basis of which entity has recognized revenue, means all the criteria of AS9 were looked at and revenue was recognized. Let's suppose basis that. Okay, so let me just use this screen. So say we are on 28th of May 2024. Say on this date, revenue was recognized amounting to rupees 20 lakhs. Everything was good till this point of time. Okay. But at a later point of time, so let's suppose the customer was given a credit period of 90 days. Okay. And it's been more than 6 months. It's been more than 6 months. Let's suppose we are somewhere on 31st of December 2024. But till date, customer has not made the payment. So now what do? Can you just simply reverse the revenue? No, you can't do that because revenue is recognized. Okay. Until the time we don't say there was an error in terms of revenue recognition, you'll not change that. So now the only problem is what? That the customer, which is an asset in the form of debtor, is outstanding in the books. Now, at a later point of time, if the company believes company will not be able to collect that money, so the provision for that debtor will have to be assessed by the company. Okay, clear? So somewhere over here, or you can say starting from this date, yeah, so this assessment will have to be done. Okay? And not really on this date. So this is only an example. Huh? So once the credit period gets over. So that is how things are always looked at. Okay. So now moving on to the next point, that is about royalty. Now, how do you recognize revenue royalty? On accrual basis. On accrual basis means once again on time basis, on percentage basis, which will again be based on the time. So as and when the royalty income is accrued, that is required to be recognized. Now dividend. So how can the dividend income be recognized? When the owner's right to receive payment is established. Now, who is going to be the owner? Say a company has made an investment. Say A Limited has invested in equity shares of B Limited. Okay. Now for A Limited to recognize this revenue. So what do you need to check? Whether the right to receive this dividend payment by A Limited from B Limited is established or not. So once that is done, dividend income can be recognized. Okay. So this standard also talks about these three types of incomes. Yeah. So what we will do is we'll just look at some examples now around some of the things that we have discussed. Okay. So now Arjun Limited sold farm equipments through its dealers. One of the conditions at the time of sale is payment of consideration in 14 days. And in the event of delay, interest is chargeable. So there is a credit period which has been given And in case the payment is not received on time from the customer, so what is the arrangement? That the entity, what is the entity here? Arjun Limited will charge interest. Okay, interest will be charged at the rate 15% per annum. Okay, now the company has not realized interest from the dealers in the past on time. Okay, sorry. As regards the interest, company has not realized. So company, though this term is there, they have not received interest and they do not generally get this interest from the dealers. However, for the year ended 31st March 24, Arjun Limited wants to recognize interest income which is due on the balances which are due from the dealers. And this amount is ascertained at rupees 9 lakhs. Now decide whether by way of interest from dealers, okay, this income will meet the criteria of revenue recognition or not. Over to you. What do you think? Yes, quickly. What do you think? Yes, I think Srinivasan has a query. I'll come to your query. Yes, quickly. Tell me, what do you think will be the basis of recognition in this case? Okay, Ritika is saying interest will be recognized on the basis of accrual. So what do you mean by accrual? So do you mean to say that the revenue will be recognized in this case? And I'm talking about interest income. So do you think interest income should be recognized in this case? Quickly. Yeah. So Kiran is also saying it should be recognized. Yeah. So now let's try to look into the solution. So the standard says, so I think Pooja has also responded. Pooja is saying company can recognize if certainty of collection is there. Okay, great. Rashmi is saying it should not be recognized. So now, if you go back to the requirements of the standard, so what does it say? Where the ability to assess ultimate collection with reasonable certainty is lacking at the time of raising any claim. Okay, revenue recognition is postponed to the extent of uncertainty which is inward. In such cases, revenue is recognized only when it is reasonably certain that the ultimate collection will be made. So in this case, if you look at the past trend, okay, which has been specified in the question, company never realized any interest. Company never realized any interest for the delayed payments. Okay. So now that's why in this case, what is it that the company will be required to do? Now this may become subjective for us. This may become subjective for us. So every time, what is it that the company will be required to do? Company will be required to assess if the ultimate collection is certain or not. And accordingly, the company will have to recognize it. Understood? Yeah. So every time this assessment will have to be done by the company. So I think I have got a couple of responses from Unni Krishnan. So Unni Krishnan is saying if the agreement says interest, it has to be recognized. Else no. Yes. So you can. So once again, so every time you need to assess that collection criteria. Okay, and basis that you need to provide. You need to recognize this. And I think same is the response from Shivanna also. Very good. So Preeti is saying, yes, you recognize. Okay, so Srinivasan had a query. So let me just go through his query. So he's saying, uh, I think he's talking about a situation. He's saying in the situation that we discussed, what would be the case if unearned revenue, if the customer terminates the contract? So Srinivasan, I think you are talking about this scenario, is it? Are you talking about this scenario? Yeah, so this scenario wherein we discussed that the company has provided services, company has rendered services, but the money is not collected. So in this case, there's no question of unearned income because entire revenue is recognized. Okay, so in this case, we were only discussing whether the money which has not been received. So what do you do in that? Okay, so in that case, only the provision criteria you'll have to look at. Then this other query from Srinivasan is, so he's saying, sir, interest income is not from the ordinary activities, or you can say interest income is non-operating. Whether we need to follow revenue recognition criteria as it is for other income for the company. See, you are absolutely right that in terms of revenue recognition criteria, we need to just go by this methodology, whether it's in the ordinary course of business or not. Okay, something that we looked at for sale of goods or for rendering of services. Now, once again over here, there are a couple of things one will have to assess whether it's in the normal course of the business for the company to do that. Okay, so if that is the case, then of course all the criteria will have to assess. The other point is if we say no, it's not in the ordinary course of business, it's about other income. For other income also, the collection, that uncertainty criteria for collection will have to be looked at. Okay, so it doesn't mean that other income you can recognize if you are unsure about its collection. Understood? So for collection, that reasonable assurance, okay, of course, that will have to be there, whether we talk about interest, whether we talk about royalty or any other type of income. Okay, and that is what you call as this prudent concept also. Yeah. Okay, so Kiran is asking, sir, how do we recognize whether we, how do we assess, how do we decide that it should be recognized or not? So same thing, same thing. So one is, of course, on the basis of arrangement, the money should be fixed. Yeah. So in this case, as far as risk and rewards are concerned, it's all about services. So that is all settled, Kiran, correct? Now, what is the second thing? That there should not be any uncertainty as regards collection. So once you get into that mode, yes, there is no uncertainty. You can recognize revenue. Fine, Kiran. Yes. Please confirm quickly. Huh? Then I think Rashmi was asking about that capital nature. Okay, so Kiran is now clear. Okay, Srinivasan is also clear on this. Okay, great. Yeah, so any more questions on this? Any more questions on this? No? All right, so let's move further. Fine. Now, very small question, but it's all about the situations. So there are some of the situations you may have in relation to revenue recognition. So we are just trying to capture that situation with the help of this example. Okay. So we'll discuss that sort of specific situation and then we'll come to the solution of this question. Yeah. So please try to understand this question. On 15th January 2024, goods worth of rupees 1,50,000 were sent on consignment basis, of which 20% of the goods unsold, means out of 1,50,000 worth of goods, 20% goods are unsold and they are lying with the consignee as at the reporting year. So now in this case, this is our reporting year, 31st March 2024. Okay, and 20% of the goods. So 20% will be what? It will be 30,000. So 30,000 worth of goods are unsold. Okay. Now, if you look at it from the perspective of the company, company has sent the goods to the consignee. And the arrangement between the company and the consignee is that these will be recognized, or you can say in relation to consignment sales. So this is called as consignment sale or arrangement wherein the company and consignee are involved. Risk and reward on the part of the company. Risk and reward on the part of the company gets transferred to the consignee only when the goods are sold by the consignee to the end customer. So let's understand as to how does this arrangement work. So there will be a company. So company will send these goods to a consignee. Now consignee is whom? So let's suppose there is a retail shop, there is a showroom. Okay. So let's suppose company will send, I'm not saying sale, company will send these goods to a showroom. You may call it as sale, you may call it as send, okay, whichever way. But for the purpose of our revenue recognition, we'll talk about it whether it will be considered as revenue recognition or not. Now, company has sent the goods to the consignee, to the showroom, and the arrangement between the company and the consignee is what? That when the consignee, when the showroom will be able to send all these goods to the end customer. End customer. So let's suppose people like you and me, we go to the showroom, we go to the shop, and we will buy these goods from the consignee. Okay. So only at that point of time when these goods are sold by consignee to the end customer, risk and reward will get transferred to the consignee. Before that, there is no transfer of risk and reward. Okay. So now in this case, if you look at it from the perspective of the company, on 15th January itself, goods moved from the location of the company to that of the consignee. Okay. And goods are still lying with the consignee, whether those are sold by the consignee or not, it doesn't matter. Okay. But those are at the location of the consignee only. So can we say that this entire amount of 1,50,000 be recognized as revenue by the company up to 31st March? Tell me, what are your thoughts? In this case, what are your thoughts? What will you do? I think some of the responses I have received. So Pooja is saying company can recognize only that part of revenue which is sold by the consignee. So only 80% can be recognized. So Rashmi is saying, sir, but commission is not recognized. No. So commission is a separate part. I'll come to that commission separately. So Kiran is saying 20% should not be recognized. What about others? What about others? Quickly. What do you think should be the revenue or the amount of revenue to be recognized in the given case? Yes, quickly. What do you think will be the amount of revenue to be recognized in this case? Pratima is saying only the amount of goods sold should be recognized. So now in this case, as we discussed, amount of revenue to the extent of 80% will be recognized. So that is what Preeti and Kiran have answered just now. Very good. So now, how do you recognize revenue? When the risk and reward get transferred. In relation to this 30,000, has this risk and reward got transferred to the consignee? No. So that's why, what is the amount of revenue that will be recognized? 1,20,000 only. Understood? 1,20,000 only. Clear on this? Yeah, everyone? Okay, so then I think Sushmita also answered this. Yes, very good. Ritika is saying consignment is a special case since the revenue will be recognized only when the, yes, great. So we just tried to capture this situation with the help of this example, but it's good you understood the concept. And please remember, situations could be various, but the concept will always remain same. So you'll always have to apply that concept, that criteria to that particular situation. Okay. So I think Kiran is clear on this. So let's move further. Yeah. Okay. So let's move on to this example number 3. Goods worth of 1,20,000 were sold on approval basis. Now this is another sort of situation. Okay. These much goods were sold on approval basis on 1st December 2023. The period of approval was 3 months. Okay. Now, what do you mean by approval basis? So at times, the goods may be sold by the company to the customer, and the customer is given a time frame, okay, within which he has to approve. Okay. If within that time frame he will not approve, then it will be considered as if there is a deemed approval, means as if those are approved by the customer. Otherwise, he can always disapprove or maybe reject that much goods. Okay. Yeah. So that is what you call as goods sold on approval basis. So I've just explained the arrangement to you. Now let's discuss this question. Goods worth of 1,20,000 were sold on approval basis on 1st December 2023. So this is 1st December 2023. So this much worth of goods have been sold, but on approval basis. Please remember, on approval basis. Period of approval was 3 months. So where does it end? 1st January, February, March. So on 1st of March 2024, this is the period of approval. Okay. After which they are considered as sold. Buyer sent approval, means the customer sent approval for 75% of the goods up to 31st of January. So within this time frame, 75% worth of goods, or you can say approval in respect of 75% of the goods has been received from the buyer. But for remaining 25%, no approval or disapproval, means buyer remained silent on that. Okay. For the remaining 25%, nothing has been communicated. And the same situation was there up to 31st of March 2024. Okay. So now in this case, what do you think will be the amount of revenue to be recognized by the company during this year, or during this year ended 31st March 24? Over to you. Please apply the same logic, same concept that we have discussed, and then try to answer this. Okay. I think I received response of Preeti for the previous question. Okay. Yeah, great. Okay, so Kiran is saying 1,20,000 will be recognized. Why? Because the time limit has expired. Okay, Pooja is saying company can recognize 75% on 31st of January and remaining 25% on 1st of March. Okay, Kiran is saying accrual concept will have to be applied. Okay, Pratima is saying 1,20,000 as his period of approval or disapproval has expired. So that's why entire amount can be recognized as the revenue. Okay. Then I think Gunjan has a question. Gunjan, I'll come to your query, but please try to answer this question. Okay. Sushmita is saying 1,20,000 will be recognized on 31st of January. Why? Because the time frame is done. Okay. And what about others? Ritika is saying company would recognize whole amount. Why? Because again, the time frame is gone. So the approval period has expired. So that's why entire amount of revenue will be recognized. Okay. Anyone else? Yeah. So now in this case, once again, what do we need to consider? Risk and reward in relation to the entity. Now, as far as those risk and reward are concerned, they will get passed on to the customer when the customer will approve. Yes. So as far as the 75% is concerned, there's no question. So they get approved and risk and reward is passed on to the customer. I think the concern was only around this 25%. Yes or no? Now this 25% again is time bound. Why? Because there is a contractual arrangement between the two parties. Yeah. So after this time frame is over, company cannot just keep it on for indefinite period. Yeah. So after this time frame is over, what will happen? As per the requirement of the arrangement, it will be considered as a deemed approval. Why? Because if he is not disapproved and the time frame is over, can he disapprove that after the time frame? No, that will not work. So that's why in this case, what is the amount of revenue which the company will recognize during this year? During this year means during the year ended 31st March 24. That will be 100% of the amount of revenue. Okay. Yeah. I think same is the response from Preeti. So Preeti is saying for 25%, you should consider this to be a deemed approval. And that is how you should recognize revenue. Yeah. So Srinivasan has a question. He's saying, sir, in example 3, why the revenue recognition criteria for remaining 25% is not followed, even though it is deemed revenue for the company. The risk and reward is not transferred to the buyer or the collection is not certain. No. So revenue recognition criteria has been followed. Now, what is the revenue recognition criteria? The revenue recognition criteria is that the buyer has got the right. So now please try to understand it. Huh? So if you look at it from the perspective of the buyer, so this much time is allowed to the buyer. He can always reject it. But if he has not rejected it, so what do you assume? It's approved. Yeah, it's approved. And as far as the payment is concerned, so the question doesn't specify that if it will not be approved, then you will consider that the payment will not be made. If let's suppose if we go with that understanding, okay, so let's suppose we think about it. So there is always an arrangement between two parties through which the buyer will be required to make the payment. Yeah, clear on this? So we have definitely looked at all those criteria, huh? Because those criteria will remain consistent, as I've told you. So those will not keep changing. Understood? Kiran is saying, sir, rejection time has gone. Yes, that is what you need to look at. Now, coming back to some of the queries which I have been receiving. Okay. Pooja is asking, sir, in this question, revenue for 25% can be recognized on 1st March? Yes. Yes, when the time frame is over. So now, if you were to answer this question, okay, you can always specify that during this 3 months, when the approval has come, 75% will be recognized. And when the period comes to an end, means on 1st March, remaining 25% can be recognized. But as far as this financial year is concerned, okay, so these dates don't matter so much. So either way you can approach. And again, the question will also specify it if it would want you to be so specific. In the current question which I have discussed with you, we were only required to comment whether you can recognize the revenue in the current year or not. And if you do that, what proportion you will do. Understood? All right. So now I have few more questions. Okay. So Sri Bingi is saying, so 90,000 will be recognized. Okay. So I think he has answered this. Very good. Then Uni Krishna is asking, sir, in online shopping, return of material for refund of money provision is available. In such situation, when will you recognize revenue? So in that case, once again, you will have to wait for this revenue recognition till the time that refund period is not completed. Okay. Yeah. Why? Because let's suppose if goods are sold to the customer and the customer, let's suppose, is given 7 days. So within 7 days, he can reject. So can you recognize revenue? No, because on 7 days, customer may reject. Okay. So that is how it is required to be looked at in those cases. Understood? Then I think this next query came from Gunjan. Gunjan is saying, sir, how can you treat, oh, sorry, can we treat credit sale as revenue recognition? See, when we are talking about revenue recognition, we are not only talking about the cash sales. So what do you mean by cash sales? means when the sales are made and money is received immediately. So that is what you call as cash sale. For example, you go to a retail shop. So you buy something and you pay it immediately. Yes or no? Yeah. So now revenue recognition has got nothing to do whether it's a cash sale or a credit sale. In both the cases, criteria for revenue recognition remains same. Understood, Gunjan? Okay, then uh, Shivanna is asking about the GST implications. So I would request you to just keep those GST implications aside, yeah, because that's a separate topic altogether. For as far as accounting is concerned, okay, so you need not worry about it as to what is going to be the implication over there. Okay, otherwise that will only complicate the things. Huh? You will get confused. Okay, yeah. So any more questions, any more doubts that you have on this, please let me know, and then we'll move on to our next topic. Any more questions? If you have, please let me know. Okay, so I have this query from Shribingi. So Shribingi is asking, sir, what if the credit sale becomes bad debt? I think we discussed this. So if the credit sales become bad, what do? You'll have to consider the provision for the debtor. Okay, yeah. So as far as that sale is concerned, I think your confusion is around the sale or the revenue. See, that revenue once is recognized is done. Okay, so you should not think that if the sale or if the money is not collected, then it will have some impact on the sale. No, that will not have any impact on the sale. Why? Because at the first instance, when you recognize revenue, so it was after following the revenue recognition criteria. So as far as that part is concerned, you should not worry about it. Okay, so that will remain absolutely okay. Understood? Yeah. Uh, Srinivasan is saying, sir, revenue, okay, dividend recognition. No, we discussed, huh? Royalty you will follow on accrual basis, dividend revenue, dividend you will follow once the right to receive that money is established. Okay, so Ritika is saying when the provision of bad debt comes, so AS 29 becomes applicable. I won't really say to be very specific about this standard at that point of time. So that also comes from the general provisioning requirements. Huh? Okay, though that AS 29 talks about the provisions for sure, but that is not very specific to the debtors. Yeah, but of course you can just draw an analogy from that standard also in respect of various things that you will be required to look at. All right, any more questions on this? Okay, Srinivasan is now clear. Preeti is also saying all clear, sir. Very good. So I'm just hoping that you have understood the concept and we have been discussing questions. Yeah. All right. So if you don't have any further questions, I think we should move on to our next topic. Okay. Yeah. All right. So now moving on to our next topic, that is AS 12. AS 12, which is about government grant. Okay, so now government grant. So at times, some companies receive a grant from the government. Receive a grant from the government. Now, what do you mean by that government grant? Grant, you can say, is an aid. Okay, it's an assistance, which could be in the form of cash or which could be in the form of, say, some of the non-cash items. Say the government may provide some relief in terms of costs of some items. Government may provide some of the assets either free of cost or at a very nominal value. Yeah. So it's an aid which is provided by the government. Why? For the benefit of the industries, for the benefit of the companies. Now, in relation to this grant, which is provided by the government specifically, please remember, we are talking about grant from the government. In relation to that grant which the companies receive from the government, now we need to understand as to how its accounting should be done. Clear on this? So this is broadly about the government grant. Now, before we really get on to its accounting requirement, there are a couple of questions which may arise. That, sir, what do we mean by government? Okay, so government grant, maybe broadly we can understand. But in this government grant, what do you mean by government? So by government, do you mean to say only central government or state government or only central and state government? Okay. And then of course, we'll discuss about various types of grants which are possible. So we'll segregate this into two parts. So let's quickly talk about government. Now, what do you mean by government? Government refers to the government per se, which could be central government, state government. It also includes government agencies and bodies of the local government or national. Yeah. So all of these things or all of these bodies, you can say, will comprise of government for the purposes of our discussion. For grant, we have discussed it could be in cash or in kind. Kind means which is other than cash. Okay. And what are the examples? Subsidies that you may have heard of. Okay. So every time you may hear that the companies are receiving subsidies from the government. Companies are receiving, say, some cash incentives from the government. Okay. Or you may have heard about a duty drawback. So it's a kind of scheme through which a relief is provided to the companies in respect of taxes or duties that they are required to pay. So these are some of the examples in relation to the grants which may flow from the government to the entity. Preeti is saying, like, for example, subsidies which are received from the government. Yes. Yeah. So that is also one of the examples you can consider. Okay. Now, in relation to the government grant, okay, which could be of various types. And of course, we'll talk about various types of government grants as we move further. There are a couple of conditions which are required to be fulfilled. Or you can say government grant will always come with some conditions. Government grant will always comes with some conditions. Okay. So you will not find that the government is giving a grant and there's no condition which is attached to that. Now, please understand now, when I'm talking about conditions which are attached to that, at times, those conditions may have already been complied with by the entity. Okay, so two situations are possible. Two situations are possible. What is the first situation? I'm not talking about these conditions. I'm just discussing about the two situations which are possible. First situation is what? Wherein the company has already fulfilled the conditions. Now, what could be the condition? Could be anything. Okay. Company has already fulfilled the condition. Okay. And on the basis of those conditions which have been fulfilled, grant has been provided. Means there is some criteria which the companies need to follow. So let's suppose the criteria was that if the company will set up a business in a remote location, company will be receiving a grant. Okay. So company has already set up business in a remote location, or maybe company is already working in a remote location for which, say, some incentive is announced by the government, some subsidies announced by the government. So now in this case, the conditions are already fulfilled. Another situation is what? Wherein the government has announced a scheme wherein the government will provide grant. Okay. and for which company will have to fulfill conditions in future. Why? Because those conditions will take time to be fulfilled. Will take time to be fulfilled. Now, what could be an example for that? Say somewhere over here. Say we are on 28th of May 2024. Okay, 2024. And over here, government has announced a scheme. So government says that if the business is located, if the business is set up at a remote location and the company employs 500 employees or more in a period of 3 years, in a period of 3 years, first year, second year, 3 year, then the grant will be provided. Then the grant will be provided. So now in this case, conditions are not fulfilled, but the conditions will be fulfilled in the future years. Okay. So both these types of situations are possible. So please remember that when it comes to the grant, one should not assume that if the money is received, so that means the conditions have also been fulfilled. Why? Because if we look at this example wherein the company is required to fulfill the conditions over a period of 3 years, maybe the government provides this money immediately, say somewhere over here. Somewhere over here. Yeah. Just because the money is received, so can we assume that the conditions have been fulfilled? The answer is no. Answer is no. Clear? Okay. Now, for the purposes of recognition of government grant as income, government grant will be recognized as income. Okay. For the purposes of revenue, also for recognition of government grant, there are a couple of conditions. What are those conditions? That the company should be reasonably assured. Company should be reasonably assured. What is the reasonably assured? That the company will comply with these conditions. Remember the conditions that we discussed? Yeah. So company should be sure. Yeah. So it should be clear that yes, the conditions which the government will attach, company will comply with that, or company will be able to comply with that. Okay. And the other one is company should be reasonably assured as around the ultimate collection of the grant money. As around the ultimate collection means the money will be received. Now you may be thinking, sir, what if the money is already received? Then this criteria is fulfilled. Then this criteria is fulfilled. Okay. Then the only criteria which the company will have to look at will be whether the company is reasonably assured that it will be able to comply with the conditions or not. Okay. Yeah. So this is how company will have to analyze every government grant and then recognize it. Okay. And then recognize it. Okay. Preeti is asking about the remote location. See, remote location you can say is a location which a remote location you can say is a location wherein the government may want some of the industrial setup to come up. Okay. So for example, if you are staying in a city, okay, so in city a lot of people get employed. Why? Because industrial setup could be there, companies could be there. Yeah. But at times there could be certain areas which are not developed, okay, which are considered to be remote, or you can say some of the village areas, or wherein the employment is not there, wherein the business opportunities are not there. Okay. So this you can just consider as an example of a remote location. Okay. So therein the intent of the government could be what? To promote that particular location. Okay. So that the people will get employment. Okay. So the revenue can be generated. Understood? So that is for the overall upliftment of that particular location. So that is for the economy at large, society at large. So that is something is what is considered by the government. Clear on this? Yeah. So now Please remember that whenever it comes to the government grant, both these criterias will have to be fulfilled, 1 as well as 2. Only and only when these two criterias will be fulfilled by the company will be able to recognize government grant. Okay, otherwise not. Now, how will they fulfill it? We'll discuss that. Now we'll, as a next step, discuss about various types of grants. And in that discussion, we'll also be talking about all of these recognition criteria. Okay. Now, grants could be of various types. Depending on the type of grant, its recognition will vary, its accounting will vary. Yeah, its accounting will vary. So Ritika has a question now. Ritika is saying, sir, can we say that the government grant is a type of revenue? I won't say it's a type of revenue, but yes, it's a type of income for sure. Okay. And why so? Because government grant will be recognized as other income and not as sale or not as revenue. Understood? It is recognized as other income. So that's why you will call it as a type of income for sure. And that's why you can see alignment in terms of the recognition criteria which were there in AS9 and which is also over here. Any more questions on this? Any more questions? No? All right. So now, the first type of grant is called as capital grant. Capital grant. And in relation to capital grant, there could again be two types. Let's try to understand that. Now, capital grant means grant which is in a relation to assets. Please remember, grant which is in relation to assets. Now, assets for a company could be of two types. Depreciable and non-depreciable. Okay, depreciable and non-depreciable. Okay, so that's why when it comes to capital grant again will have to be segregated into two parts. Grants related to depreciable assets, grants related to non-depreciable assets. So now we are talking about grants related to depreciable assets to begin with. Now, in relation to grants related to depreciable assets, before we get on to the accounting requirement, can you give me some examples of assets which are depreciable? Over to you. Quickly. Can you give me some examples of depreciable assets? Yes, fast please. Give me some examples of depreciable assets. Great. So Kiran is saying machinery. Preeti is saying machinery. Pooja is saying furniture. Sushmita is saying machinery. Very good. Ritika is saying equipment. Pratima is saying plant and machinery. Shribingi is saying building. Great. Yeah. Preeti is saying furniture, fixture. Kiran is saying plant and machinery. Yeah. Sunil is saying machinery, furniture, building. Yes. Great. So now what do you mean by depreciable assets? Assets which are subject to depreciation. As simple as that. Now in relation to depreciable assets, standard says that there are two options for recognition of government grant. There are two options, means there are two types of accounting a company may do. I can see a lot of responses. I think Sumit, Pooja, Oni Krishnan, they also answered this. Okay, great. Sorry. Now, in relation to these two options, the accounting requirement will be different. But because it's an option, so what does it mean? means either of these options can be followed by the company. Either of these options can be followed by the company. Means if the company wants to follow accounting as per option 1, it can do that. If the company wants to follow accounting as per option 2, it can do that. So there are two options. Okay. Will that be a concern for a company, or do you think there is anything specified for a company to only choose option 1 or only choose option 2? No. Because these are options, so that's why company can choose either of them. But once an option is chosen, that will become the accounting policy of the company. So that needs to be followed on a consistent basis. So that is something you need to remember. So it will not happen that in a particular year company is choosing option 1, then next year company is moving to option 2, third year company is moving again to option number 1. No, that will be inconsistency. Okay, and that is what we discussed in case of AS1 as well as AS5, that consistency of accounting policy will have to be there. Yeah. So Kiran is asking, so why the government will provide grant for the assets? So as we discussed, see, it's all about economy. Okay, government is there for the benefit of economy at large. So let's suppose if the government wants to promote a particular industry or provide some relief in relation to a particular industry, in relation to some of the business setups. So maybe there are some small companies, there are some SMEs to which the government wants to promote. So every now and then, if you hear government keeps coming up with all of these schemes. So why is that done? Yeah. So for the promotion of for the promotion of some of the businesses, for the promotion of some of the industries, for the promotion of some of the locations. Yeah. I think Mohammed has also answered this. Yes. So Mohammed is saying backward area ke liye provide karte. So it could be for backward area, it could be for upliftment of growing area as well. Yeah. So for the benefit of society at large and for the economy. Understood? So now what is the first option? In the first option, the grant which the government will provide will be in relation to a specific item of PPE. Yeah. That amount of grant should be deducted from the value of the asset itself. Okay, so this is one. We'll talk about it with numbers as to how this is required to be computed. Option number 2, for the depreciable assets, what is the option number 2? That the grant which the company will receive, that will not be reduced from the value of the asset. Instead, that will be recorded on a gross basis. That will be recorded on a gross basis. Now, I think we should pick up some examples with the help of which we should try to discuss this. Okay, only then we'll get the clarity. So let's look at this example. Z Limited purchased an item of PPE fixed asset for 50 lakhs, which has estimated useful life of 5 years, and the salvage value of this asset will be 5 lakhs. On the purchase of asset, company received a grant of 10 lakhs. Okay. Now, you are required to pass the necessary journal entries in the books of the company. For the first 2 years, if the company will follow option number 1. If the company will follow option number 1. Okay. Now, before we get on to this solution, can you tell me, first of all, what type of grant is this? Can you tell me what type of grant is this? Over to you quickly. Which type of grant is this? Srinivasan is saying, so if the government is providing grant on depreciable asset, it should be capital work in progress. We'll discuss that. I think Mohammed has solved this. He has shared the response. Kiran is saying it's a capital asset. Pooja is saying it's a grant related to depreciable asset. Yeah, I think Preeti is saying fixed asset. No, remember there were two types of grants. There were two types of grants. sorry, there were various types of grants. So one type is what we discussed. So which type of grant do you find here? It's a grant related to depreciable asset. Okay. Yeah. It's a grant related to depreciable asset. Now, in a grant related to depreciable asset, we discussed there are two options. Option number one is what? Wherein the amount of grant will be reduced from the value of the asset. So that was option number one. So the question says you need to apply that option number one. You need to apply that option number one. Okay. And accordingly, you need to do the accounting. I think Sumit, Unikrishnan, Pooja, Shibingi, they have answered this. Okay, great. So now let's begin on the accounting in this case. Now, whenever it will be option number one, so what is it that the company will be required to do? Company will be required to record that asset, record that particular asset at net amount. Net amount means when the company will purchase this asset, it will be for 50 lakhs. Now for this 50 lakhs, government has announced a grant of 10 lakhs. Government has announced a grant of 10 lakhs. So what is the amount at which this asset will be recognized? So this asset will be recognized at 40 lakhs. Okay. This is what you call as net basis of accounting, or you can say option number one. Option number one. So let's try to understand this with the help of accounting entries also. Okay. Yeah. So let's look at the accounting entries also. I can see some of the responses in between. I think Sushmita is sharing the accounting entry. Very good. So, and I think Mohammed is also sharing the accounting entries. Great. So now what is the accounting entry which will be passed in the year one? So first of all, the asset will be purchased. So when the asset is purchased, what is the accounting entry that will be passed? Asset debit to bank. Yeah. So this asset worth of 50 lakh is purchased. So what is the accounting entry that will be passed? Asset debit to bank. Okay. Yeah. 50 lakhs. And please remember, whenever you will be required to give accounting entries, narration it becomes important. Please don't forget the narration. Narration becomes important. Okay. Now, as a next step, company will receive a grant from the government. Company will receive a grant from the government. So what is the accounting entry company will pass? Bank account debit. Why? Because this much money is received to asset. Now this amount will not go to P&L. Please remember, this 10 lakhs will not go to P&L. No, this will not go to P&L. Instead, where does it go? It gets reduced from the cost of the asset. It gets reduced from the cost of the asset. So that's why the value of the asset will be reduced over here. Clear on this? Value of the asset will be reduced with this. Okay. So now, can you tell me what is the value of the asset that we have? I think Sangeetwani is saying it's 40 lakhs. Great. So now, as a next step, we need to charge depreciation on this asset. Yeah, it's an asset on which depreciation will have to be charged. So can you tell me on what amount this depreciation will be charged? So should we charge depreciation on 50 lakhs or 40 lakhs? Tell me, on what amount depreciation should be charged? Will that be charged on 50 lakhs or 40 lakhs? Pooja is saying 35 lakhs. I'm not sure where you picked this 35 lakhs from. Kiran is saying 40 lakhs. What about others? On what amount company will charge depreciation? So Shmita is saying 40 lakhs. Very good. See this 40 lakhs, this 40 lakhs is the amount which is left. Okay. And On this 40 lakhs, depreciation will have to be charged. So how do you compute depreciation? Depreciation will be 40 lakhs less 5 lakhs of the residual value. I think this was the basis for computing 35 lakhs by Mohammed also. Okay, great. Divided by 5. 5 is what? Useful life. So what is the amount of depreciation? 7 lakhs. Okay, 7 lakhs. Now, let us suppose if the company had not received any grant. Let us suppose if the company had not received any grant. In that case, can you tell me what would have been the amount of depreciation? In that case, what would have been the amount of depreciation? Mohammed is saying 9 lakhs. Kiran is saying 9 lakhs. So how do you compute it? 50 less 5 divided by 5. 9. So now, depreciation which the company will charge year on year will be what? 7 lakhs, which will go to P&L. As against 9 lakh, which would have gone to P&L. So that's why in the P&L, year on year, there is a reduced depreciation charge. Year on year in the P&L, there is a reduced depreciation charge. Yeah. So in a way, this grant income is getting recognized in the form of what? Reduced depreciation charge. So grant in option number 1 is getting recognized over the life of the asset only, but in the form of reduced depreciation charge. Clear on this? Okay. So now in the second year, what is the set of accounting entries that will be passed? Same. So this set of accounting entry for depreciation and moving this depreciation to P&L, this same set of accounting entry will also be there in second year. Okay. Clear on this? Simple, easy to do. Yeah. Any questions so far? Any questions so far? Any doubts that you have? Or please confirm if you are looking for a break here quickly, or shall we continue? Kiran is asking why is it called deferred income? We'll talk about it. Okay, so in option number 2, we'll talk about it. Ritika is saying it's clear. Pooja is saying no break. Very good. Kiran is saying no break. So I think we should continue without the break. Yes or no? Mohammed is also saying no break. Very good. Yeah. So now moving on to another example, in which case we will follow the accounting requirement as per option number 2. So now we have the same fact pattern available. So there is an asset for 50 lakhs. Okay. Useful life is 5 years. Salvage value is 5 lakhs. And the government has given a grant of 10 lakhs. Okay. So the same fact pattern is there. Now, in this case, what is the requirement of the question? Pass the journal entries for the first 2 years if the company follows option 2. If the company follows option 2, option 2 means gross basis of accounting. Gross basis of accounting. Or the question may also say if the company treats this government grant as deferred income. If the company treats this government grant as deferred income. Okay. I think I have a question before this. Srinivasan is saying, sir, if there are 2 options, company can choose always the option which is beneficial to it. So then why option 2 is required? So what is the problem? Huh? So if the company can follow something which is of the benefit to the company and which is not to the disadvantage of anyone else. So what is the problem? Huh? Okay. Yeah. Clear on this? Then I think Sumit is saying, sir, I joined late. Is there any difference between subsidy and grant? There's no difference. It's just that subsidy is an example of government grant. Okay. So in a way they are same, but subsidy is an example of government grant. So government grant is a wider term. Subsidy is something which will fall under government as one of the types, or you can say as one of the items of government. That's it. Okay. And we are now discussing about capital grant, which is in relation to depreciable assets. Please remember. And in that case, there were two options, option one, option two. So we are discussing option two. Okay, Sumit? Yeah. All right. So now talking about this option. So now in this case, in this option, when the asset is acquired, so at what amount you will record it? Now the value of the asset will not be reduced by the amount of grant. Okay, so it will not reduce the value by the amount of grant. So the asset will be recorded at 50 lakhs. But what do you do in relation to the government grant that you receive? Now, this government grant is in relation to the asset. Okay, this is in relation to the asset. And this asset has a life of 5 years. So this is 1, 2, 3, 4, 5. So in a way, we can say that this grant has been received in relation to this 5 years time. In relation to this 5 years time. Of course, that is linked to a specific asset. But other than that asset, this is also for a time frame. This is also for time frame. Yeah. So that's why what we should do is we should keep this grant in the form of a liability. So when you receive this amount, so over here on day 0, when you receive this amount, what do? We will park this amount as a liability. And what is going to be the nomenclature of this liability? Deferred income. Deferred income. Now, what do you mean by deferred income? Income which is required to be deferred over a period. Income which is required to be deferred. Now, you may be thinking, sir, why do you call it as liability? You can say it's a kind of item which will sit in the balance sheet and which will get recognized in the P&L over a period of 5 years. And that's why you call it as income deferred or deferred income. Understood? Yeah. We'll get more clarity around it as we discuss the accounting entries in relation to this. I think I have this query from Srinivasan. Srinivasan is asking, sir, okay, just clearing my doubt. I think it is not causing any inconvenience to you. So absolutely not. So if you have any doubts, please feel free. Don't think there is any inconvenience. It's important that you raise questions because the more and more clarity you will have, the better it will be for us. So that's why we are here. Okay. So I think Pooja has started sharing the response to this. Kiran is asking, sir, why the grant related to depreciable asset are treated as deferred income? See, this is an option which is available. So there are two options company can follow. One, they can net it off the way we have done in option 1, or they can keep it gross. So they don't net it off. So when they don't net it off, so where do you go? You will have to park it somewhere. You will have to park it somewhere or not, because the income you will be able to recognize over 5 years. Yeah. So that parking is what you call as deferred income. Understood? All right. So let's get on to the accounting entries. So in the first year, what is the accounting entry that the company will pass? First of all, asset is purchased. So asset debit recorded at 50 lakhs. Now, in the first year, when the money is received from the customer, money is received from the government. Now, in this case, this money will be parked to an account, which you call as deferred income. This is deferred income account. Okay. And where will this amount go? This will go to balance sheet. Yeah. So now, at the end of first year, what is going to happen? Now the asset will get depreciated. So what is going to be the amount of depreciation? So it will be 9 lakhs year on year. It will be 9 lakhs year on year. Okay. And this deferred income that we had parked amounting to 10 lakhs. This will also be released over a period of 5 years. This will also be released over a period of 5 years. So 2 lakhs will be recognized as income. So now in this option, you can say that at one place, there will be a depreciation charge. At one place, there will be a depreciation charge of 9 lakhs. And in the same P&L, an income of 2 lakhs will be recognized. So net, if you look at both of them, can you tell me what will be the impact on P&L in the first year? If you look at net in the first year, what is going to be the impact on P&L? Over to you. In the first year, what is going to be the impact on P&L? Pooja is saying 7 lakhs. Very good. And if you go back to this option number 1 that we had, if you remember, in that particular option also, impact which was taken to the P&L was 7 lakhs only. Yes or no? That was 7 lakhs only. So if you look at both the options, option number 1 and option number 2, in both the options, impact on the P&L is same. Impact on the P&L is same. The only thing that gets changed under both the option is what? Presentation. In option number 1, the amount is shown net. In option number 2, the amounts will be shown gross. So let's understand the accounting entry. So in the first year, same way depreciation will be charged, which will be taken to P&L. And this deferred income, this will be released. This will go to P&L. So this deferred income will be released over a period of 5 years. 5 years, how do you compute this 5 years? Over the life of that particular asset. And this will flow to the P&L. This will flow to the P&L. So that's why in the first year, what is the impact on P&L? 7 lakhs. In the second year, what is the set of accounting entries will pass? Same set of accounting entries will pass in the second year. Depreciation of 9 lakh, which will be moving to P&L. And then, of course, this deferred income, which will also be released to P&L. Okay. And the same set of accounting entries will continue. So now, if the company will keep doing that, so what will happen? At the end of the 5th year, this deferred income balance will become 0. This deferred income balance will become 0. Yes or no? Yes or no? Yeah. So this deferred income balance will become 0. Yeah. And this asset will also get depreciated fully. So this deferred income is what? It's a parking account, which will get released over a period of 5 years. Okay. Okay. Any questions so far? Any doubts that you have? Preeti is asking, sir, if the income is, if in entry, deferred government grant, deferred income for 2 lakhs, you will recognize it over 5 years. Yes. So you'll just keep repeating this accounting entry over a period of 5 years. Absolutely yes. Sangeetwani is asking which option is better. See, the standard doesn't specify any option. Huh? Both the options are good. So either of the options can be opted for by the company. So there is absolutely no preference which is given by the standard. It's up to the company. It's up to the company. So whichever option company wants to follow, they can follow that. Yeah. So with this, we have discussed about grants which were in relation to depreciable assets. Grants which were in relation to depreciable assets. Okay. Now, moving further, there could be some grants which are in relation to non-depreciable assets. Now, what do you do with those types of grants? Grants which are related to non-depreciable assets should be taken to capital reserve. However, if there is a grant related to non-depreciable asset and that requires fulfillment of certain conditions, the grant should be credited to income over the same period over which cost of meeting such obligations is charged to income. Okay. In that case, the deferred income balance will arise and that will be treated the same way we have discussed in relation to depreciable assets. Now, other than this capital grant, there could be a revenue grant. Now, what do you mean by revenue grant? Means the grant which is not related to assets or the grant which is in relation to revenue. Now, what do you mean by this? Grant which is related to revenue means which doesn't have any linkage to a specific asset. Which doesn't have any linkage to a specific asset. For example, say there is a scheme of the government. Okay, what is the scheme of the government? Government says that if the company will employ 100 employees over a period of next 3 years, company will employ 100 employees over a period of next 3 years. Now, in this case, if you look at the scheme, is this grant provided by the government? So let's suppose if the company employs more than 100 employees or 100 employees over a period of 3 years, so the government will provide, let's suppose, reimbursement of that employee cost equivalent to 50%. Or let's suppose government announces that the company will be given, let's suppose, rupees 1 crore. Okay, or say 10 crore. So whatever be the amount. Now, in this type of scheme, in this type of grant, do you find any asset to which this grant is linked to? Tell me. Do you find any asset to which this grant is linked to? Tell me. No. Yeah. So there is no asset in this particular scheme. Yeah. In fact, this grant is something which is in relation to the expenses which will be incurred by the company. So this grant is something which is in relation to P&L. Yes or no? So that's why, what do you call this type of grant as? Revenue. Grant related to revenue. Sumit is asking Provident Fund. No, so Provident Fund is not a grant. Huh? Provident Fund is an employee benefit. It's an employee benefit. Okay, it's not a government grant. That is a part of CTC to the company. Okay, yeah. And even if you talk about a government employee, so for government, it's a CTC. So employee is rendering services, and that's why that grant is given. Okay, that's why that money is given. In fact, that is not really called as a grant. Clear on this? Okay, yeah. All right. So now, how do you recognize such a type of government grant which are in relation to revenue? Okay. So now, these are recognized over the period of time. Over the period of time means what? Over the period, the conditions are fulfilled. See, these grants will either go to other income, means they will either be recognized as income, or they can be netted off from the cost incurred. So let's take an example to discuss this. Say every year for employing 100 or more employees, company incurs, say, 40 lakhs in first year, say 30 lakhs in second year, 30 lakhs in third year. So let's suppose this is the cost which the company incurs. Okay. And what is the scheme of the government? Government says 50% of the employee cost government will reimburse. Okay. So that's the scheme. So in this case, because it pertains to a 3 years time frame, so that's why, can you just recognize this government grant? Or let's suppose if this amount is rupees 1 crore fixed. So can you just recognize this immediately in the first year? No. Should you wait for this third year to be completed and then recognize it? No. You need to accrue this. So that's why, how will you recognize it? You will recognize it on a proportionate basis over a period of 3 years. Over a period of 3 years. Okay, so this will be on accrual basis. On a proportionate basis over a period of 3 years. Understood? Now, when you recognize it on a proportionate basis over a period of 3 years, So now there again, there could be two types. Either you can take it to other income, or the other option is what? Standard says other option is the company can reduce this amount from the employee cost. This amount from the employee cost. So in the first year, what will happen? 33.33 lakhs will be reduced over here. 33.33 lakhs will be reduced over here. 33.33 lakhs will be reduced over here. Okay. Yeah. So the employee cost will get reduced. So either of these options can be opted for by the company. Both are permissible. Okay. Then I think Preeti was sharing one example of this type of grant. Srinivasan is asking, sir, if the government grant is land, how do we recognize? And please explain why depreciable asset is not considered as capital work in progress. See, depreciable asset means an asset which is subject to depreciation. Okay. When you talk about capital work in progress is an asset which is under production, that is not getting depreciated. When will the depreciation start on that? Depreciation will start on that once that is fully ready for use. So that is when the asset will be called as an asset ready for use, and that is when you start depreciation of that. So now to say that, okay, so let's suppose if the company is in the process of setting up plant and machinery. So a company is in the process of coming up with a plant, okay, which is in WIP stage. So now can we say that it will fall under depreciable asset? Yes, it will fall under depreciable asset. So we are not saying that this will not fall under depreciable assets. The only thing is we picked up an example wherein the depreciation was getting charged. Why? Because that was ready for use. But if it is in the process of setup and after setup, this will get depreciated. So that will also get covered over there. So there is absolutely no problem in doing that. Okay. Yogendra is asking, so do we consider government grant as fixed asset? No. Government grant you will not consider as fixed asset. I think we talked about it. Okay. Now again, that will depend. If that is related to a fixed asset, then you will not consider as fixed asset. You will adjust that with the value of fixed asset if you are following option number 1. But in option number 2, you will not even adjust that. You will keep it separate. Okay. Then Ranjan is asking, sir, please explain what are the related expenses. I think we just discussed. In this example, the related expense will be what? Employee cost. So this will be reduced from the employee cost. Okay. So every time, depending on the scheme which is involved, the nature of the grant is there. You will have to assess as to what is going to be the related expense. In this case, the related expense was employee cost. Okay. Srinivasan is asking, sir, in the case of land, see, in the case of land, that is non-depreciable. Okay, so that's why you have a different methodology over there. Harish is asking, sir, in the grant given before, if the grant is given before the expense is incurred or after the expense is incurred. So that will again depend on the scheme. It doesn't really matter to us whether the expense has been incurred or not incurred. And we can take both the examples. Let me just clarify that point. Okay, so now let's say, for example, in this case, okay, so this scenario which is there in front of you, let's suppose this 1 crore is received over here, say on this date. Okay, say on this date you have received 1 crore. Now, in case the company has received 1 crore on day 1, so what will it do? It will amortize it over a period of 3 years. How? By treating it as deferred income. If let's suppose company is going to receive 1 crore after 3 years, there again it doesn't matter. Why? Because every year company will recognize some government grant and will book a receivable for that. Okay. So whether this money is fully received partly received or going to be received in future, doesn't matter as far as the accounting is concerned, which we have discussed. Okay, Harish, clear on this? Yeah. Ritika is saying, sir, if the government says supply goods or services on lower price, we will compensate. Then is this a grant? Yes, this is what you call as subsidy. That is also a grant. So many a time, some of the businesses, okay. So for example, if you look at some of the agricultural products, okay, therein the companies they get into a scheme of the government. So what is the scheme? That some of the agricultural products they will produce, they will sell at a reduced price. So let's suppose 100 is the cost. Okay. So they will sell it at 50. Why? Because the government may say remaining 50, I'll reimburse. Okay. I'll pay you. You will not charge it from the customer. So 50 company will receive from the customer, 50 will come from the government. Okay. So that is what you call as a subsidy at times. Okay. And that is what you call as government grant also. Clear, Ritika, on this? I think Preeti is asking about the grant. So what if we receive grant on land? Yeah, so that is again we have discussed. So if you receive grant on land, what do you call it as? That is a grant in relation to the non-depreciable asset. Non-depreciable asset. Okay. All right. So now there is one more type of grant. Let's talk about it quickly and then we'll discuss some examples. Grants which are in relation to promoters' contribution. Grants which are in relation to promoters' contribution, or grants which are in the nature of promoters' contribution. Kiran, I'll come to your query. Where the government grants are in the nature of promoters' contribution. So how do you treat them? They will be treated as if that's a capital reserve. They will be treated as if that's a capital reserve. Means that amount will go to capital reserve. Okay, and we can discuss this with the help of example, I think, through which you will get some more clarity. Top and Top Limited has set up its business in a backward area, which entitles the company to receive from the government a subsidy of 20% of the cost. Cost means cost of setting up of business. Okay. Having fulfilled all the conditions under the scheme. Now, what are those conditions? We don't know. So all those conditions of the scheme have been fulfilled. The company, on its investment of INR 50 crore in the capital assets, received 20% of the cost of this capital asset, which is equivalent to 10 crore from the government. Okay. Now, company wants to treat this 10 crore. So this amount of 10 crore which the company has received, company wants to treat this as an item of income and thereby reduce the losses. Maybe the company is incurring losses, so company wants to book it as income. Now the question is that can the company do so? Can the company treat it as an income? Now, in this case, the government grants, which are in the nature of promoters' contribution. Now, what do you mean by promoters' contribution? Means that is, they are given with reference to the total investment in an undertaking. Means for a company, in respect of the total investment of the company, if with that reference that amount is given, or you can say that's a kind of capital contribution which the government has done. Okay, so that's a kind of capital contribution which the government has done. Means in a way, government is contributing towards the capital of the company. Okay, so government is not contributing towards a specific asset, something which we discussed in case of capital grant. Yeah, so government is not contributing towards a specific asset. Instead, What is it that the government is doing? Government is saying, okay, this is your total investment, capital you require. I'll contribute to say 20% of the capital. Okay. And for which no repayment is required. Why? Because it's not a debt. This money will come and stay with the company. So such type of grants are called as grants in the nature of promoters' contribution. So now, if you look at this particular scenario, in this particular scenario, government is giving grant in respect of the total investment of the company. So is there any particular asset to which it is attached? No. So let's suppose company needs a fund, a capital of 50 crore today. Why? Because it's want to set up its business. So government is saying, no problem. I'll contribute to 20% of this capital. I'll contribute to 20% of this capital. So what do you call it as? A grant in the nature of promoter's contribution. And how do you treat this? So what will be the accounting entry for this? Bank debit to capital reserve. So this is going to be the accounting entry for this. Simply. So there is nothing as regards depreciation. There is nothing as regards P&L that you need to look into. So where do you take it? It will go to capital reserve. It will go to capital reserve. And please remember that capital reserve is a restricted reserve. Means if the money will go to capital reserve, the company will not be able to utilize it everywhere. So it's only restricted. It's restricted for some specified purposes. Okay, clear on this? The third type, yeah. So now, any questions, any doubts that you have, please let me know. In the meantime, I'll just look at some of your queries. Okay, so Kiran is asking, sir, what is the difference between grant in relation to revenue and grants in relation to non-depreciable assets? See, non-depreciable asset means grant is specific to a particular asset. For example, land. Land is a non-depreciable asset. But when it comes to revenue, it should not be in relation to any asset. Like we discussed, when the grant is given for employing say 50 or more employees in the next 5 years. So there is no asset in relation to which this grant is given. So that's the difference. Okay. Swaroop is asking, sir, electric subsidy given by the government. Just a minute. Let me just come to your queries now. Okay, so I think Swaroop has a query. Just give me a minute. Swaroop, I'll come to your query also. Okay, so now Swaroop is asking electric subsidy given by the government. Government gives money to the company, and will that be treated as a government grant? So once again, so if that is a subsidy which is provided, and if that is not really linked to a particular asset, okay, if that is not really linked to a particular asset, so what do you call it as? You will call it as a grant. And can you tell me which type of grant it will become? Yes, over to you. Which type of grant it will become? Which type of grant it will become? Tell me quickly. Over to you. What do you think? Which type of grant it will become? Yes, quickly. Which type of grant you'll call it as? So that is not really linked to an asset. So can it become capital grant? The answer is no. Can you say it's a grant in the nature of promoter's contribution? Again, no. So which type of grant it will become? Revenue grant. Understood? Yeah. So I think same is the response from Kiran also. Any more questions on this? Any more doubts on this? All right. So I'll move further on this. Yeah. Now, as a next step, okay, I could see a lot of responses now. So Sumit has answered. Harish has answered. Okay, great. Shrivingi has answered. Okay, great. So now let's move further. Now, at times it may happen that the grant is received, or the grant was going to be received, which the company was expecting. But please remember that every time a grant is going to be received or grant will be received, it is always subject to some conditions. It is always subject to some conditions. Okay. At times it may happen that initially the company was clear, or our company was expecting that it will be able to fulfill those conditions. But subsequently, what may happen is company may not be able to fulfill those conditions. Subsequently, it may happen. Now, in that case, if the conditions are not fulfilled, if the conditions are not fulfilled, so what do you think? Can the company keep that government grant with itself? Over to you. What do you think? If the company will not be able to fulfill the conditions, so can the company keep that government grant with itself? Pooja is saying no. What about others? Preeti is saying no. Yeah, great. So now when this grant cannot be kept by the company, so what is going to happen? Company will have to refund those grants. Company will have to refund those grants. Okay. So now in relation to these grants which are required to be refunded, let's try to understand as to what is going to be the accounting treatment. Okay. So now accounting treatment is going to be very simple. You just need to simply reverse whatever was recorded in the previous years. Okay, so let's try to discuss this conceptually first, and then we'll pick up some examples also. If the grant is required to be refunded, then once again, its accounting will be dependent on the type of grant it was. Yes or no? Because if we are saying we need to just reverse the accounting which has been done, then we need to go back and look at as to what was the accounting which was done, or maybe which was being done by the company. Yeah. So once again, depending on the type of grant it is, its refund will also be required to be recorded accordingly. So now, if we talk about grant which was related to revenue, grant which was related to revenue. So now, if there was a grant which was related to revenue, so earlier, when the company would have received it, company would have either recorded it as income, because over a period of time that income will get recorded. Yeah. And some part of it may have been lying outstanding. Yeah. So if you go back to this example that we discussed, in this example, let's suppose if we are in second year. Okay. Now, 1 crore is the amount of grant which the company had received. 1 crore is the amount of grant which the company had received. Okay. Out of which 33.33 lakhs was the amount of grant which was taken to income. But the balance 66.67, that is outstanding. That is outstanding as what? Deferred income. That is outstanding as deferred income. Yes or no? Tell me quickly. At the end of first year, 66.67 is the amount of deferred income. Yes or no? Why? Because entire money has been received, out of which only 33.33 lakhs has been taken to P&L. So balance amount will be outstanding or not? Tell me quickly, everyone. Over to you. So that will be outstanding. Yes or no? Yeah. So Sitkala is saying yes. What about this? Yes. Okay, great. Preeti is saying yes. So now in this case, let's suppose if somewhere over here, this grant is required to be refunded, then what is the accounting entry company will pass? Very simple. This deferred income will be debited. So this deferred income will be debited by 66.67. Money will have to be credited to bank, 100 lakhs. So where will this balance impact go? P&L, 33.33. Means the amount which would have been recognized in the P&L in the previous year, to that extent, once again, the charge will go to P&L. Okay, but this will be done first of all after adjusting the amount of deferred income, if any. So whenever there will be any refund, At first place, what do we need to check? At the first place, we need to check if there is any balance of deferred income outstanding or not. If that is outstanding, that is the amount with which this refund will get adjusted so that it becomes zero. Like in our example, we discussed it. So it became 66.67 debit. Okay. And the balance amount, where do you take it? The balance amount, where do you take it? So the balance in our example was 33.33. Where do we take it? It will go to P&L. Okay. Now, if in case it's a grant which is in the nature of promoter's contribution. So now what do you need to do? Very simple. So earlier when the grant was received, what did we do? Capital reserve was credited. So when this grant will be refunded, what do you need to do? You will debit capital reserve. So this amount will be released from the capital reserve. So you will debit capital reserve. Understood? So the capital reserve will therefore be debited. Okay. Third, if the grant is in relation to assets, so there again, what do you need to check? There and again, we need to check as to what was the accounting entry which the company had followed. Company could have followed two options. One, wherein the amount was recorded on a net basis, means the amount was reduced from the value of the asset. If the amount was reduced from the value of the asset, so now when the refund will be given, value of the asset will be increased. So let's suppose initially asset was recorded at 40 lakhs. Remember in our example, asset was recorded at 40 instead of 50. So when the grant will be refunded, what will you debit? You will say PP debit to bank. So the value of fixed asset will go up. Okay. And in case this was not netted from PPE, let's suppose this was not netted from PPE. PPE was recorded on gross basis. So then the deferred income balance would have been there. So in that case, what do you do? First of all, deferred income balance will be adjusted. So we'll debit that. And the balance impact. Will go to P&L. Balance impact will go to P&L. Simple. Okay. Now let's suppose if this grant was in relation to depreciable asset. So in case of depreciable asset, what did we discuss? Capital reserve would have been credited. So now, what do you debit? Capital reserve, exactly similar to what we have discussed here. Or if in case this was recorded as income, so now what do? You will release that from income. So very simply, what do you find out? Every time there is a government grant and its refund is required to be given, you just need to simply reverse the previous accounting that you would have done. Okay. And while reversing that, please remember, if there is a deferred income balance, make it zero first of all. If there is a balance in deferred income, make it zero first of all. And then the balance impact will go to P&L. Okay. So this is the principle you need to remember always. Yeah. All right. So any questions from your side on this? And Mr. Ajit, I would also request if you would just open that channel so that students can ask queries. Anyways, students have been discussing queries. All right. So now any questions, any doubts that you have? All right. So now quickly on to the disclosures. So the disclosures will be around the accounting policy. Pooja, I'll come to your query. Just give me a minute. Accounting policy which the company would have adopted. Nature and extent of government grants, means the type of grant it is. Okay. At times the grant could be in the form of non-monetary assets, which are given at concessional rate or free of cost. Okay. So all of those disclosures are required to be given. So now let me just come to your query and then we'll continue on this remaining part as well. Yes, Pooja, please go ahead with your query. Yes, Pooja, I understand you have a query. You have raised hand. Okay, so in the meantime, I'll just go through this query of Srinivasan. So Srinivasan is asking, sir, if it is land, okay, can you please explain how will you record that in the financial statements and its impact? See, very simple. Huh? You will credit capital reserve. So grant you receive bank debit to capital reserve. As simple as that. Disclosures, of course, on the disclosure, the company will have to specify the accounting policy in relation to non-depreciable assets. So in their accounting policy, they will specify they have grants in relation to non-depreciable assets which have been accounted for basis capital reserve. Okay. And if there is a refund, so that accounting policy will also have to be brought down. Okay. Yes, Pooja.
सर इसमें जो गवर्नमेंट ग्रांट है इसमें जो मॉड्यूल में एमसीक्यू के क्वेश्चन नंबर 2 राइट पर बता दीजिए
पूजा आपकी वॉइस बहुत लो है
सर एमसीक्यू का क्वेश्चन नंबर 2 मॉड्यूल के अंदर जो है इसको एक्सप्लेन कर दीजिए
You are talking about study material?
यस सर
Okay, just give me a minute. Let me just get done with this accounting standard completely, and then I'll come to your question also. You're saying MCQ number 1, is it?
Oh, sir.
MCQ 2. Okay, I'll go to that part also. Okay. Anyone else? In the meantime, any other query if you have? No? All right. So let's get done with this part quickly. Huh? All right. So now we have discussed about government grant. So now what I have also done is I've just put down all of these points in the form of a summary so that tomorrow when you'll have access to this, okay, so you can just understand as around each and every point, its accounting treatment is specified and what if that you are required to do in case there is a refund. So I think this summary is going to help you a lot. Okay. So later on at the time of your examination, you can just have a quick reference to this. Okay. So now capital grant, if that is a depreciable asset, so there are two options. And if those are refunded, what is the accounting treatment? If that is non-depreciable, then there again, there is an accounting treatment. What if it is required to be refunded? Okay, same goes for grants related to revenue, grants related to promoters contribution. Now there is another type of grant. Let's quickly talk about it, which could be in the form of non-monetary assets and which are received free of cost. So what do you mean by this? At times, government may provide an asset to the entity. For example, land. For example, land. See, now there are two different things. Huh? At one place, a company may have a land and the government is giving some grant, say, which is in the form of cash grant, or maybe some other scheme is announced. So we are not talking about it. Government is saying that this particular piece of land is provided to this company free of cost, or maybe at a very nominal value. At a very nominal value. So now in that case, what is the accounting entry? In that case, land will be debited. So let's suppose government has provided land at rupees 1 lakh only. So its market valuation is 1 crore, but it's provided at 1 lakh only. So land debit to bank means it will be recorded at nominal value. You may be thinking, what if this is provided free of cost? At times that may also happen. In that case, let's suppose that is provided free of cost, just to keep a control. Okay, company may record that at very nominal amount, maybe at rupee 1 or rupee 100. Okay, so at nominal value that is required to be recorded. All right. Okay, Srinivasan is asking about the notes for the previous sessions. Sure, I'll just find out. Huh? I'll just find out. So you'll get access to everything. Huh? Don't worry. I'll find out. Anyways. All right. So I think Sangeetwani has also got one query. Okay. So now let me just go to the module because this query comes in relation to MCQ. So I'll just open that module and discuss that MCQ. Okay, so that was MCQ 2, which has been requested. All right. So okay, so now if you look at this MCQ2, I understand this is what has been requested by you. It says government grants that are receivable as compensation for expenses or losses. Okay, at times government may provide relief in relation to compensation for expense or losses incurred in a previous accounting period or for the purposes of giving immediate financial support to the enterprise with no further related cost. So how do you recognize it? Okay. So option number one, recognize and disclose in the P&L of the period in which they are receivable as an ordinary item, or recognize and disclose in P&L in which the losses or expenses were incurred, or recognize and disclose in the P&L in which they are receivable as an extraordinary item, or disclose, don't recognize, only disclose in the P&L, disclose in the P&L in which they are receivable as extraordinary item. So now, if you look at these options, and in fact, in relation to this particular accounting treatment, you'll understand that if you look at option number D, is this possible? This option number D is not possible. Why? Because in the P&L, only disclosure will not be given. Okay. So disclosure is something which will go to notes to accounts. So you should just remove it. I'm saying, how should you really approach an MCQ always? So whenever you get stuck. Okay. So option number D is gone. So now we are left with option number A, B, and C. In all three options, it is talking about recognition as well as disclosure. And in all the three cases, recognition is going to be there in the P&L. Now, what is the difference? In option number A, it is saying, should you treat this as an ordinary item? So is it really an ordinary item? No. Why? Because this pertains to the losses or the expenses which the company has incurred in the previous years. So can this be an ordinary item? The answer is no. I think we discussed this in the previous session. Should you say that this should be recognized in the period in which the losses or expenses were incurred? No, because you can't go back. Okay. So our accounting standards don't permit you to go back and restate that. So that's why, what is it that you will be able to do? Only option number C. So you will be able to record that when they are receivable, means in the year when you are going to receive it. Okay. Or when you find that will become receivable. Okay. Yeah. So of course, option number C, but because this is not an ordinary item, so that's why the disclosures that you will give will be in relation to extraordinary items. Okay. So that again will have to be evaluated. Understood?
सर ये मतलब बिजनेस से रिलेटेड है तो इसको नेक्स्ट ऑर्डर में कैसे कर सकते हैं?
पूजा, your voice is not very clear. आप repeat करना please. क्या कह रहे हो?
I want to say that it is related to business. So how we can determine it as extraordinary item?
Yes. So Pooja, definitely it is related to business. There's no doubt about it. But in relation to business, it pertains to some of those activities, some of those transactions which have taken place in the previous years. So if you go back, if you look at that question,
it should be an exceptional item.
And this is something, in fact, which comes from the requirements of accounting standard itself. Okay. So if you go and look back, so what does it say? Government grants. Okay. Look at this question that are receivable as compensation for expenses or losses incurred in previous accounting period. Okay. Clear on this? So it belongs to those periods. So that's why we are not going to call it as something which is in the nature of ordinary. Understood? So there is a purpose why we are not call it as something which is in the nature of ordinary.
Sir,
in the context of this answer only, and that too in the context of this answer only. All right?
Yes, sir. So it should be an exceptional item also, right?
I won't say exceptional item. Why? Because I would say this would meet the criteria more of an extraordinary item. Because please once again understand that this specifically comes from the requirements of accounting standard. So there is no interpretation which is involved. accounting standard gives you a specific guidance in respect of such type of matters. So that's why you will be required to follow the accounting standard the way it is written. Clear?
सर एक और क्वेरी थी, इलस्ट्रेशन नंबर 4 के अंदर पार्ट नंबर बी में,
क्वेश्चन नंबर 4 के अंदर पार्ट बी,
इलस्ट्रेशन नंबर 4,
illustration 4 part B. Okay, just give me a minute. Just a minute. Illustration number 4. I'll have to put illustration number 4. Part G. Okay, so I'll just open this illustration for everyone's reference. So she's speaking about part B. So I think, so we'll have to just read this question. I'll just read this quickly. Company runs charitable hospital. It incurs salary, staff costs, etc. to the extent of 30 lakh per annum. As a support, local government grants a lump sum payment of 90 lakhs to meet the salary expense for a period of next 5 years. Okay, so in this case, what is it that you are required to do? You are required to pass the journal entries in the books for the first year if the grant is treated as other income. Okay, so now if the grant is treated as other income, so tell me what can you do? Money is received immediately. Money is received immediately. So 10 lakhs is received. So you will debit bank. But can you just record this 90 lakhs immediately? No, you cannot record this 90 lakhs immediately. So that's why you will park it under deferred income. Okay. And this deferred income will be released year on year. Over a period of what? Over a period of next 5 years. So if you go further, you will find that they are releasing this deferred income over 5 years. Okay. 90 divided by 5. Clear on this? Now, if let's suppose it is not treated as other income, then what will you do? Because it relates to salary expense. So in the first year, salary expense is what? 30 lakhs. In the first year, salary expense is 30 lakhs. So salary expense is debited 30 lakhs. Now, if you go by this second option, then the money which you will receive, you will definitely debit bank and credit deferred income. But this deferred income will now get adjusted against salary expense. This will now get adjusted against salary expense. So at the first place, what will you have? Salary expense debit. So I think it should be 30 lakhs. And so it seems to be a typo. Yeah. And then to the extent of 30, to the extent of 18 lakhs, this salary expense will be released. So, okay. Clear on this, Pooja?
सर ये सैलरी एक्सपेंस अकाउंट डेबिट टू बैंक ये 30 लाख होना चाहिए.
Yes, yes. So it will remain same. So it seems to be a typing, huh?
Okay. And sir, जैसे कि ये deferred income to salary expense 18 lakh.
Yes. So now what have you done? So let me just, because on that I'm not able to write anything. So let's understand it this way. See, in the first year, so we are in year 1. Okay. Company has incurred an expense of salary of 30 lakhs. Okay. Now, in option number B, what does the standard say? Reduce this expense. 18 lakhs. Reduce this expense. So the salary expense will therefore become what? 12 lakhs. Okay, clear on this? So the salary expense which will be shown in P&L will be what? 12 lakhs. So this is going to be the salary expense in year number 1. Okay, so then Pooja, is it sorted?
सर हम इसमें ये एंट्री कर सकते हैं कि सैलरी एक्सपेंस अकाउंट डेबिट 12 लाख एंड डेफर्ड इनकम अकाउंट डेबिट 18 लाख टू बैंक 30 लाख. क्या ऐसा कर सकते हैं?
Yes, हम ऐसा कर सकते हैं, बिल्कुल कर सकते हैं. That is absolutely okay. See, instead of passing 2 accounting entries, you want to pass 1 accounting entry. Yes or no? आप यही तो कर रहे हो ना, आप 2 accounting entry को क्लब कर रहे हो एक में. Impact तो सेम ही है, बात एक ही है.
एक और क्वेरी थी फाइनेंशियल स्टेटमेंट से रिलेटेड, क्या पूछ सकते हैं?
फाइनेंशियल स्टेटमेंट, सो विच टॉपिक इज दैट?
सर फाइनेंशियल स्टेटमेंट के अंदर जो एफडी फिक्स डिपॉजिट होता है
ओके,
वो, हाँ सर, जैसे कि 5 ईयर का क्या उसे हम कैश एंड कैश इक्विवेलेंट माने या इन्वेस्टमेंट माने? जो करंट मतलब
पूजा आपकी वॉइस क्लियर नहीं है, सो यू आर टॉकिंग अबाउट फिक्स डिपॉजिट, तो आप कह रहे हो जो फिक्स डिपॉजिट होता है उसके बारे में आप क्या कह रहे हो?
सर मैं ये जानना चाह रही हूँ कि फिक्स डिपॉजिट कैश एंड कैश इक्विवेलेंट होता है या फिर इन्वेस्टमेंट में हम इसको कंसीडर करेंगे, नॉन करंट इन्वेस्टमेंट या करंट इन्वेस्टमेंट?
सी देखो,
इसके बारे में एक बार क्लैरिफाई कर दीजिए।
या श्योर। सो देखो, आई थिंक आपको रेफर करना चाहिए अकाउंटिंग स्टैंडर्ड 3, which is in relation to cash flow statement. Okay, maybe you can just go and look at that accounting standard. So that accounting standard defines cash and cash equivalent. It says cash and cash equivalent is an item which can be realized into cash, okay, which is something which is equivalent to cash, and it defines a time frame. So if let's suppose you invest in a particular item, say you invested in a fixed deposit, and the original period of maturity when you invested in a fixed deposit was 90 days or less, that is when it becomes cash and cash equivalent. Otherwise it may not be a cash and cash equivalent. So let's suppose when you go and book a fixed deposit, your original maturity period is what? Your original maturity period is 1 year, 12 months. Okay, but now let's suppose when you are standing on the balance sheet date, I'll take an example to explain this. So let's look at the screen now. So now say initially when you booked the fixed deposit, okay, when you booked the fixed deposit, it was for 12 months. So its original maturity period was what? 12 months. But now when you are standing on 31st March 2024, okay, if you look at it from 31st March 24, what do you find? That within next 30 days, it will get matured. So now in this case, will you call it as cash and cash equivalent? No. Why? Because cash and cash equivalent is going to be an item which will have a maturity period of 90 days or less from the date of acquisition. Okay. Accordingly, you will have to assess whether that fixed deposit will become cash and cash equivalent or other non-current asset. Clear on this, Pooja?
यस सर। सर लेकिन जो फिक्स डिपॉजिट होता है उसे तो हम कभी भी कैश में कन्वर्ट करवा सकते हैं, चाहे वो 5 साल की भी क्यों ना हो।
देखो, हम उसको कभी भी करवा सकते हैं, लेकिन वहां पे भी क्या होता है कि जब भी हम उसको कभी भी करवाएंगे तो करवाते टाइम हमें उसको मैच्योर करवाना पड़ता है। ओके, सो आप जब उसको मैच्योर कराते हो, so there are two things which are attached to it. One is the principal, the other one is interest. So whenever you go and pre-mature your fixed deposit, bank will always charge a penal interest. Does it happen or not? So if you go to the bank will not pay you the same amount of interest which would have been payable if the maturity would have been there, or if the fixed deposit would have matured on time. So generally they charge you 1% as the penal interest. Okay, so this is what the standard describes. Standard says that if that is convertible into cash with changes in value which are insignificant. Okay, now when this is getting converted into cash, so the changes in value, so this 1% penalty clause arises. So which is why you need to analyze it the way I have explained. Clear?
ओके सर, मीन्स कि हमें इसे जैसे अप टू 3 मंथ से कम की है तो हमें कैश एंड कैश इक्विवेलेंट, अदरवाइज हम इसे इन्वेस्टमेंट मानेंगे, राइट सर?
Other non-current asset. Okay, sure. So I can see this query from Preeti. So Preeti is asking, sir, my question is different from the topic. So called up application not received then forfeited by the company. So I think you are talking about called up application not received and then forfeited by the company. So I would request, I can come to this query also. Maybe some of those students who have got questions related to this particular query, we can discuss that first. Yes, anyone else, any more questions, any doubts that you have? Any more questions, any more doubts that you have? Yeah, so we are done, but please remember, there is one topic that is on AS14 amalgamations. That is not yet picked up by us. So we are going to pick up that in the next session. So please come prepared with that. Okay. So amalgamation is something we are going to pick up. So AS14 as well as this amalgamation, adjustments, all of these things will discuss in our next session. Okay. Yeah. So some of you who want to move out, they can just move out because we are done. And if you have any questions, any doubts, just feel free to discuss those questions. Srinivasan is asking about the notes. Yeah, sure. I'll just find out. Don't worry. Yeah. Preeti, I'll also come to your query. I have made a note of this. I'll have to just, look into this and come back to you. Okay. Anyone else? Any more questions if you have? Any doubts? Any questions? No? Because if you don't have any questions, then I think we can conclude our discussion for today. And of course, I have made a note. I think Sangeetvani has got one query. She's asking, sir, page number 8.26 MCQ2. So I think MCQ2 we have just discussed. Maybe Sangeetvani, you may have missed out that. MCQ2, I think if you're talking about study material, we have discussed that already. Okay. Yeah. So just go back and look at this recorded part. Maybe you have missed. Okay. Anyone else? Any more questions? Any more questions? No? So Mohammed is saying no. All right. So then thanks everyone once again for your time and for your wonderful participation. Just feel free to put across your queries, questions. If by chance we have missed out, I'll just make a note of that and we'll just try to ensure that we'll cover that in the next session. But in the next session, please come prepared. Please just go through this amalgamation because it's a big topic and it's important that you come prepared with this, so that we can discuss more and more questions on this. All right. So thanks everyone once again.
Thank you, sir.
Thank you, sir.
Thank you.
Thank you, sir.
Yes, thanks.